Hey everyone, welcome to your daily update for SOL and BTC. Firstly, we are moving a bit, so we've definitely been retracing since yesterday, which is good because that's pretty much what we were expecting. And just a reminder that really Wednesday 17th here and Thursday the 18th is where we're going to have a whole bunch of news, and then Friday as well. We've got this Bank of Japan policy rate. So there could be surprises in amongst this. And because of that, I would say now is a time that major players will be withdrawing their liquidity from the market. Order books are probably going to get thinner, and based on that, the spread can be more volatile. And if there are going to be any big players who want to really shove the price around, it's pretty much going to be in these 3 days at these moments when the books are the thinnest that they will do it, and it will be more economical to do it with thinner order books. So yeah, just keep in mind FOMC. Even if everyone thinks they know what the outcome is going to be, it doesn't mean that the books are going to be full of orders, and therefore it's going to be potentially one of the best times to pump it or dump it or do both. Like we see we get news and then we see price go in the wrong direction logically. That's because people want to buy the positions that they want, and they want them at a discount, and then they'll pump it up the other way, and then everyone goes, "Oh, geez, I got stopped out," and then the trade went the way I expected it to. But yeah, just a victim of being in a bit early and someone pushing the price around. So yeah, so just remember 17th, 18th, 19th, there's a lot of news in there. That's the website. There's plenty of websites out there that can show you this kind of stuff, but cryptograph.com is the one I'm using. Okay, looking at the one-day liquidity for SOL and BTC, pretty even on BTC. It's just been right in the middle, so people are placing their bets, but it's pretty equal. So you've got reasons to pump up there again to those 116s, 118 area, and you've got reasons for it to be dumping down to 113 and 112. This I just don't think we've really had this move at all. Like structurally, it's there, it's waiting, it's going to play out, but it's just going sideways, and I think they're just waiting for thinner books before they push it. And on SOL, a little bit more bearish, so people have started to short, which is kind of what we want. We've got that 253 target, daily hold target, which is still in play. We haven't gone and hit it yet. I don't think they're going to go and hit it until they actually get a decent amount of liquidity to the upside to go do it. So that's what we're seeing here. We're seeing the price go down, people start to pile in their shorts, and instead of shorting sort of from 247 or above, which was sort of where we had a lot of structure to reject, they've started shorting down here at like 237, 238. So they're all within the range of the next move. And we have those things like the 3 days, those sort of time frame targets, which are down about that 228 area, and then we have sort of major support kicking in from 214 and below. So we don't quite seem to have the liquidity down there on the 1 day to bother going to 214 yet, but it's probably there on the higher time frames. So if we have a look at the 7-day, so you can see that cluster forming up there at 253, which is that upside daily hold level, and yeah, you can see they're starting to fill in all of this liquidity to the downside. So we've got that bit of a gap there between sort of the 227 and the 224 area. I think once that starts to get full, then it's worth sweeping down and grabbing some of that. And we might see a little push back up today. There's some really low time frame stuff, just like 4-hour, 8-hour stuff at the moment, which is pointing up to a revisit of these 238 areas. So we might see that get taken and then a dip down. It's low time frames are worse moving. Okay. And the 30-day, both of them are bullish. So there's more liquidity to grab to the downside overall. But there's still, if you're going to go and sweep those lows, you might as well go and grab that 217 and then go down. So it's still possible that they'll go and get that. And yeah, there's not really anything past 253 being that daily hold. We have run out, like as I mentioned in the last couple of videos, 247 was our highest minimum fib target that existed. So there's not really a lot of reason to push up too much more, other than we'll probably bounce off some daily support and then go and tag that 253 area, which would just be a pretty standard structural trend move. And yeah, we're showing definitely a very obvious cluster there to meet those 228 retracements, so that's probably going to come at some point soon as well. So that's all the liquidity showing us. It's short term, as you can see, we're getting movement, which is nice, and people are placing bets. So we've just even right now, actually, we've got some new liquidity sort of forming in between markets. So this is pretty much how it goes. They take it, they go sideways, the gaps get filled, they take some more. So direction is not, always that easy to tell, because you know that there are reasons for it to go up and there's reasons for it to go down. But I think on the real short term, they'll probably come up and grab this 237, 238 up here based on 4-hour, 6-hour, 8-hour structure. So that's probably going to happen, but we've got this area down here in that 228, which is more based on 2-day, 3-day structure, which they'll probably come and grab as well. They just got to bridge this gap, and the easiest way for this gap to get bridged is to go up, so people start to chase it. So that's all that's really saying. Okay, let's have a look at some charts. So SOL BTC, yep. So it rejected off the trend very cleanly. It's been pushing down since then. There are some hard close levels in here. It looks like it may open underneath those if it stays kind of where it is. And we'll be getting some kind of trends in here today. So let's have a look at that. Yeah, so we got that trend yesterday and we're on the wrong side of it. Looks like it's going to break to the downside, which means it'll shift the trend to there. And it's all about the size of this wick and the opening candle. If it opens on the top side of the new trend, then it can bounce off the new trend, and that might give it that push up to 253 that we need by bringing in a bit of strength. But it's still obviously got resistances up here that it can then reject off and continue its path down. So, and yeah, the weekly's rejecting off the weekly range trend, so this may go up and down a bit, but ultimately this based on the weekly, it really needs to come back more. And monthly is still just rejecting the trend, which is pretty normal. So this still needs to come back more. Okay, what do we got here? So we did exactly, this is where you insert one of those GIFs that says we knew this was coming, right? So we did exactly what we thought. We swept the lower range, we got back above, we bounced off the support, and we've come up here to test that hold level at 64.49%. So now that we've tested that hold level, we're going to potentially reject a little bit. So what can happen here, and this is sort of right on that critical line, is it can close back inside this range. So that means a close over 64.31. If it closes over 64.31, then it's going to try and attack the trend or the break level again. So that actually means further dump. So safety assets going up means alts go down. But it could actually close just under that. So it's really just teasing on the line. And it hasn't broken this downtrend. So currently it would suggest a bit of a pullback towards the trend, which might give us that little push up in alts. But the fact that it's found support down here and it's built another hold level down here, even if it actually comes back down to this, it will then try to bounce up and break the next trend. So yeah, this is probably gonna, really all this is actually saying is that things might go, all depending on this exact close, they might either go up a little bit more first and then down, or they might go down and then up. But yeah, that's all that's really saying. It's certainly not in a position to see any major pump in alts, is what this is saying. You'll stay around the area we've been in, by ranging and consolidating, or more likely that there's more room to move to the downside, really, but no trends are changing, so it's a bit hard to tell. All right, let's have a look at totals, see if they make it a bit clearer. So rejected the new hold level. It's down underneath the trend. It's not breaking anything today. It's not moving a trend. It's not creating any new downtrend. All it's really doing is closing under some horizontal levels. So yeah, it is creating an origin level up here for future breakouts. So we could look at, you could put an alert on this level at 371.99. So as an origin level, it basically means that if it goes back up to that, it's probably going to have a bigger rejection the next time, which would make a bit of sense because it's also the trend, where the trend shifted. So sitting around that area, you would have, if the price approaches it too quickly, it would be approaching it from the reverse side of this trend. It would be hitting an origin level and hitting a first touch rejection of a moved resistance trend all around the same time. So you can imagine that all of that at one go would create a bigger reaction, which would be just indicative of hitting an origin level anyway. So yeah, so that might mean that you get a little bit of a push up in the totals, so everything goes up, and then a bigger dump from that. So that sort of plays in with going and hitting that 253 level on SOL finally, and then maybe hitting those 117 levels on BTC finally, and then having a bigger pullback thereafter. Okay, so if we look at it non-DXY balanced, yeah, we're just rejecting hold levels and trends. This is going to break and move the trend, so that's going to come through there, and it is still holding that 3.71 trillion level at the moment, but it could come down. I mean, a lot of this can change in 1 hour and 36 minutes, but for this to get really bad, it would have to, the body of the candle has to come all the way down here to about 3.67 again, or maybe 3.68 would probably be enough to open on the wrong side of the shifted trend. So the most likely outcome from this is that we bounce either just from where it is at about that 371 if it stays here, or we go under that and we bounce off the trend. Now there is potential for a real tight consolidation and dump in this wedge here. So if it was to close under 3.71, the most bearish thing it could do is form this little wedge, and in doing that, it could come to trend. It's pretty hard to draw these with the tools, but hopefully you just get the idea. It could come down to the trend, back up to that, and then break the trend to come down to this next level. So we could get that. That would be the real bearish sort of tiny little pump, and it probably wouldn't get a higher high from that perspective from what we've seen now. It would be sort of more like a higher low on the lower time frames, and sorry, lower high on the lower time frames. So the most bullish outcome for this is it actually uses the trend and pushes back up to this top one, and then rejects back down again. But that's kind of in the middle. Okay, and weekly we probably won't worry about too much. The weekly still should retrace. It's just kind of the only way the weekly can retrace is to dive this trend, which it's got 6 days, so it definitely can. So I'd still be conscious of this 355 level. Like I'll show you something at the end of when we get to the high time frame SOL chart, which says that these things tend to play out. It's just when, and how long do they take. So I'd still be looking at that 3.55 level. Okay, BTC. And So BTC is not shifting its support trend on the daily. It's creating sort of a topping formation in the form of a range trend on the daily. So it is producing this. Use the right tool, eh? So it's producing this. Okay, so this is bad because it's not making a hold level here at 115.88 based on how low that candle is. If it was to push up through the downtrend and hit this and hit these break levels up the top here and hit the reverse side of the support trends and the range trend all at the same time, then it's really got nothing to hold it. So it would have to reject, and that's when you can start to see, a better, bigger pullback kicking in. So now the alternative to all of that is that it doesn't create this, and the only way it doesn't create that is that if the candle closes down. So if it was to close below 115,222.6 today, but then the scenario changes because it actually shifts the support trend. So it could shift to here, and when that shifts, it could bounce off that trend, that 114 bounce again, and go up and test something like the break level here at 116, because that'll get created. And that'd be a lower time frame origin level based on the candle structure. So, it could reject again from there, or it could go up and finally test those 117 areas. But it'll still be under the downtrend. So ultimately, if it did push up there and sweep that liquidity, it should just pull back down. So one way or another, BTC just does not look that bullish on the lower time frames at the moment. It's either going to create these resistance trends and reject off them by going up, or it's going to move support trends, bounce up and reject off older resistance, which is already there. It's just does not look that bullish. And although it does still have this target up here at 120, which at some point it's going to go get that. And that that's kind of the thing you see before these big macro news events, is there's a target just sitting there, and it looks kind of like it's outside of the ranges that you're playing in at the moment. Like we're playing in this area, 117 and lower. But they have these targets just sitting there from the news, and that could be your 253 target on SOL, it could be your 120 target on BTC, and then maybe they just pump up there and everyone chases the yay rate cut, and then they hit that, and then they just dump down into it, because your narrative is all just what you make of it, and it's really just about, like, the target's there, they'll go hit it, and then they'll go, why did we get a rate cut? Well, that's because the economy's screwed. We're in a recession. Oh no, we should dump. And then down it goes. And then everyone just goes, oh yeah, I didn't think of that. And then blah. It's all noise. Okay, so today. Today is literally just sandwiched between trends. So it's been supported by the range trend that was formed internally here, and it's rejecting off the standard downtrend. So it's not really too much to say there. It will create a slightly different support trend today. So you will get this coming through here. So it'll have 2 levels of support to touch, and that could allow it to try that push up again. It's got this real subtle little level up here at about 119 that never quite got tapped. It's got an origin level here at about 119.8, just waiting for the first interaction and dump. So there's another one up there at 120.8. So there's lots of things that could go and hit up there and then have a big reaction, but first it's got to get out of this 116.984 level, which is kind of where it's trapped in at the moment, and it's still got a retracement to perform based off this, which it's as it builds these trends, it's harder for this retracement to play out because all the trends act as support. So sometimes that's, you wait for these things to happen, and they can take a long time to happen because it's got to get on the other side of the trend before it actually can play it out. But yeah, I wouldn't call this a bullish close. So it's going to create some support. But if it does close below 115.416. It'll also create a hold level. So yeah, it sort of seems like it's going to try and create this tight little wedge, and then it's going to break one way or the other based on doing two things, which is creating support and resistance in a really close proximity on the same close. So the 3-day 3-day will create an interior support trend. So that's going to run up here, and it's pretty close to being able to open on the wrong side of that. So if it goes down even just a little bit more, 115.2 even would be pretty close to just being able to open on the wrong side of that. Of course, we could have a little pump before the end of the day and negate all that, and then it doesn't create the support trend, and then it breaks the downtrend. If that happens, the downtrend would shift to the top, and then it would, depending on the size of the wick, it could reject off that and travel back down, or not reject off that if it opens on the top side. I think if you've watched probably 2 or 3 of these videos by now, you can sort of see that really it's just the outcome of the close, and everything it does between open and close is just kind of noise. And once it closes, we either get shifts of trends or hard closes or breaks of levels, and then our next moves come from there. And the bigger the time frame, the longer those moves can take to play out. Okay, 6-day. So 6 days, not really doing anything. It's above the support trend. It's kind of hovering around on the old range trend from back here. If it was to open a new candle where it is now, it would have a higher probability of rejection than moving up. It will create a hold level, so there'll be something to hold it if it does reject, which is down here at about 111.6. And yeah, so if it pushes up a little bit before close, it might bounce off the top of the range trend and then travel up to test one of these higher ones. But yeah, it's not saying too much. It's got an origin level at 120.8 and another trend, or another couple of trends to reject off up here at about 117s to 118s, and it may not even do that, because if it just opens where it is now, it may just reject straight off the 115 area and come back to the 111. And once we start to get into these higher time frames, they start to paint sort of a bigger ranging picture. But this 43-day one looks like it's going to form a 43-day proper range with a hold level, so that's great. We like this. It shows we've had decent accumulation up here. It's not moving any support. It does have a hold level down here at 102.942, which is just perfectly placed for so many of the higher time frame retests. And it does have a support trend to hold it, which basically has confluence as of next candle. So it looks like we're going to open on the wrong side of the resistance trend for the second time. So we haven't really seen a major retrace since hitting that trend. So we could quite easily just tap up here to, funnily enough, about that 117 area, and then reject back down to the hold. So structurally, this is kind of a move that I would have expected to play out already in the last sort of 43 days, but it just hasn't. And so if you create a hold and you hit a trend, you typically come back to that hold, especially when they're all within the same range. I mean, you don't just come back down here to 61k because you create, a trend and reject off it up here at 120 or whatever. But it's this is all really just inside that same range. You would expect this to be coming back to here, so it's a little bit weird that it's not yet. And on the 86-day, we've got support around that 103, 104 area down in here. We've got confluence. So basically it's all between 100 and 104, all the support of these trends down here. And we are showing a close above that 108.350 backside level, but it's not a hard close. So there's absolutely no reason why that would offer support to this time frame. but we're also going to potentially, I think we're moving that trend today, so it's coming from all the way down here, it's flipping to the top side. So this gives us a target of about 128 to the upside, and I shared this particular time frame in the Discord today, just because it's also got this. It's a pure range trend, so Jan 1st candle all the way through to September 15 candle, and it's got a range trend which is coming all the way up here, which is about 155, 156, and it's never had a first touch rejection. So there's some potential for something like this to create a rejection all the way down to a hold level, which could be this 93k mark. So that's quite big. Like if it went up here and hit this at 155, it could come all the way down to this 93. Where it gets a little bit bear market-ish is that if we actually test this hold level at 93,570 prior to hitting that range trend, then there won't be a hold level in that area anymore. And then you're talking about these untested levels down here at 72 and 64. Unless it can spend time up here. So the only way really for it not to have a really big dump after hitting that area is for it to be able to hold it, just hold it for long enough that it hard closes some of these levels, and then maybe the retrace would only be to sort of like the 100k area or a backside trend or something. It just has to hold sideways, because if you just can hold the price sideways long enough, eventually what you run into is you run into something like an older support trend like this one that's coming up inside here, and then you can bounce off that and keep going up. But certainly that's a trend I'd put on a chart and I'd set an alert on it. And I'm going to do that right now. And when price hits that, it's definitely a case of checking out your risk. So if it even gets there, it's still got to get through this one first at like 120, 129, which I can't do that till tomorrow. Okay. And here we go. This is not telling us too much. It's going to open above one trend, which is sort of around that 112 area, and it's going to open below the other one, which is around that 119 area. So all it's really saying is that we're going to get some kind of move between these levels. And if it goes up first, down, then it'll just it's all about whether it dives it. If it gives it a really good dive, then it's basically an 80s to 90, 94s, 95s sort of area, somewhere in this trend, it'll find support. So that's all that's telling us. Okay, over to SOL. And so SOL on the daily is going to lose the local uptrend. It's going to close below the range trend. So this could pull up before the end of the day. And that can happen in the last 10 minutes even. So diving a trend like that, there's a pretty good chance it does pull up. Either way, what will happen is this support trend will shift to here. So if they really want to continue this dump quickly, what they've got to do is push it down before the end of the day to open on the wrong side of the trend, the new trend that forms or shifts, and then they could continue the dump quite quickly. But if they were to close here, it's probably going to bounce off the trend and retest the range trend. It could use the backside of the range trend to break the main trend and then keep traveling down. If the candle was to move up and close over, say, 237, then it could bounce off the range trend and go up again to test that 253 area. So it all really just depends on whether they want to move out of this area quickly or whether they want to just consolidate here for a bit more. Because where it is now, it could just create a wedge in here and then consolidate in that area, and then either go down or up first. But it all comes down to what they do in the next hour and 19 minutes. Okay, the 2-day, well, it's rejected from the break level there. So anyone who shorted up around that 247 area would be nicely in profits now. It's going to create a new trend support. So that's going to be, so that one's going to get broken today. And this one is going to be formed. So once again, it just depends on where, where does it close? At the moment, it's pretty close to closing. On the line, I would still say that 233.8 is probably just above the line. But if it comes down a little bit more, it could bounce off the backside and continue the downside movement. This other resistance trend that's sitting here, this is not hard close because it came from the wrong side of it. So we need at least 2 more days of positive price movement in the upwards direction to hard close the bottom trend. And then, believe it or not, you can still actually reject down to that trend just as a pure retest. And this is definitely an area we're looking at, which is that 127, 128 area, which, does it come after we go up and then maybe we hard close it, dive down to retest it? Or do we just go there now and bounce off it and then, hard close it? So that's looking, it's hard to say really, an hour and 17 minutes. And if it comes down a little bit, then probably going to reject and go down. And if it goes even in here or just up just a smidgen, then we're probably going to go up. So, but I wouldn't suggest it's a sustainable up based on the fact we've come from the wrong side of these trends. Okay, 3-day. So 3-day moved its trend to the upside. It's swept the trend liquidity. It's rejecting. This has got a very defined target of 228.764. It hasn't got there yet, and there's nothing really to stop it other than a trend that it might create today, which is going to be from here to here. But it looks to me like, yeah, if it closed at this price, it's going to open basically on the wrong side of that trend and then be able to continue down to that 228 target. So, and the 228 target's a minimum fib target, whereas the actual trend support that it might travel to would be a bit lower than that, more like that 224 area that we saw on the more like that 224 area that we saw on the liquidity charts at the start. Okay, the 6-day is doing nothing. It's gone up, it's rejected off the topside trend. So this is all just confluent with why that 247 area was kind of the end game for longs at this stage. It's rejected off that. No trends are moving, no new trends are getting created. It's got a hold level down here at 214, which is where the confluence starts for all the major supports that have been created recently. So that's an area of massive interest to me. I think it's probably that next step overall if the price can get there. Okay, so the 43-day. So 43-day is closing above a really old range trend. It's actually the highest close we've ever had on a 43-day candle on SOL, so that's really bullish. And funnily enough, if it was to retest the range trend, that's about 214. So this is just more confluence to really high time frame support is starting to develop at 214. There's also areas down to sort of like 204, and then there's trends that are down lower, and so there's all these reasons why or places it could go if it goes lower. I mean, heck, we could come down here and retest the cross point of basically the unbroken trend and the support trend, which is all the way down in the 150s. Yes, it could happen, but at the end of the day, it's also fair to say that at 214, there is enough support at 214 to send the price to 312. So it's just there. The minimum fib target available on the high time frame 214 entry is 286, but some of the range trends aim above 300, so it's looking bullish. Okay, and this is just closing above trends, which are all around that 214 area again. So once again, highest close we've ever had on an 86-day candle. It's looking pretty impressive. And 129. The reason is I should put this in the group earlier today because it sort of gives you an idea about how things can take a long time. So, in 2021, we had this engulfment. And if someone had said to you in 2021, or if someone had said to you when the price of SOL was, $295, that, hey, just be careful because we still have a test of 96.5 that's pending, and it can take a long time for these things to play out. And then everyone would go, nah, it's going to go to 1,000, or like, no, it's nothing but up, 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 up. And then sure enough, what happens is we create a trend, we reject off the trend, and we head all the way down to retest the target that is generated from this candle back in 2021. So, these things can take a long time. So from a positive perspective, we now have those facing the other way, and we've got all the support down here around the 189 area, and that's already done it once, but the thing is it's created it across multiple timeframes. So not only at some point in the future is 189 going to eventually lead to 247, whether it's what happens now or what happens later, we don't know. But we've got some timeframes now where 214 leads to 286. So it's just a case of how deep do they go, or in the case of what you saw and what you see with this one is how high and how long. Like it took time, it moved trends, it created and swept liquidity, and then came all the way down. And it took these 129-day candles. So, from the moment it first touched the activation was the 1st of January 2024 candle, and then it was basically a year before it actually came down and did it. So yeah, these are the things that exist at the really high time frames. You don't know which way it goes first, but you do know that there's a really high probability of these things playing out eventually. So okay, that's about it today. I think most of the other alts are going through pullbacks, so I'll probably re-enter SUI based on what it does next month, or whether it comes down to this range trend down here. I mean, that would be awesome. If we do get a really big dump in alts, and you get a retest of this sort of 276 area, that would be a great place to get a SUI entry. Alternatively, any retest of just the normal uptrend, which is coming through here at, where is that? It's about 2. Oops, moved it. About 3, somewhere between 310. It's roughly where it's at the moment. So sort of anything down into that trend, and you could just ride it back up to the other trend, about 3.7, 3.8 again, or the break level up here at 4.3. So yeah, there's a couple different places you could enter that. ENA might actually come back. So, and this is why you just wait sometimes, because ENA has exactly like what you just saw on that SOL long that took years to play out, surely. Great. But ENA might get there faster. It's got a target down here at 54.28 cents. So, if we do have a big pullback in alts, then we could see that target. And this is a monthly time frame. It might just mean that at the end of the month, this trend shifts up to the top side here, then we get a rejection off that and a move back down to here, and then we get a really good entry for the longs that are in play back up to this dollar level. So it's just it's a long game, and just set some alerts and wait. Okay, and SUI on the 1 day. So it's got a range trend coming through here. This is potentially a longable trend, just depends on how it closes. If it closes, because it's in the daily hold level there, we should actually probably see if that's played out. Okay, have we gone back to 3.4 or 3.54? Entry candle, flip to lower time frames, drop it down, see if it's followed its path. Okay. No, not really. So it's gone into the, down to the 1. It's pretty close, but not really. So it's gone down to the 1 and it hasn't gone back to the 1618 yet. So the thing you got to watch with this one is where does it close? Because if it closes just above the range trend, opens on the new side of it, it'll probably perform that move back up to the 1618, in which case there could be a scalp in there. It will also create a range trend because of the hold level left behind, which is going to be an interior range trend like this. And so you could get a bounce off that range trend back up to this one. So more or less that little wedge of consolidation that we're seeing forming on a lot of other stuff at the moment, like whether it's totals, BTC SOL, it seems like they're just trying to form this little, pause the price for another day almost, which makes sense if you're heading into things like, high time frame news soon. Let's just keep it sideways for a bit. But yeah, so if it closes under the range trend, I probably wouldn't long it straight away, but maybe you could long the new range trend. If it really dumps into daily close and closes under the newly formed one, then just expect it to go down. So that's yeah, there might be a trade there on SUI. Keep an eye on that for the shorter term. And World Liberty Finance is going to shift its trend to there today, so that's pretty bearish. It could just reject off the backside of that, and there isn't really a hold level to hold that, so might be a range trend somewhere. I'll leave it up to you guys to find it. Not too interested in trading this, but it's starting to form some structure, so you might find it gets you might find it gets above this. It's sort of got to go through its cycles, so this was your pump up, that's when they sold into everybody. As it's come down, now it's got to go through its cycle trends through here before it really has a decent move up. And ZEUS is rejecting off. So it moved its trend to here yesterday. It's rejected off the trend. It's come back to the hold level. It looks like it might close under the range trend, so that's really bearish. And if so, that could absolutely tank again. So that's why I sort of said be careful with this one. It had already gone through its distribution, pump up, distribution again. There's no guarantees that the VCs and big players behind this one actually want to go back up again. So it might just be a dead coin now. So I'd probably suggest just wait on this and see if it starts to break these hold and break levels, or create some new range trend that doesn't have an objection like this stopping it. Or even just heck, if this is actually a weekly candle, so even just if in the week it gets back up above that trend, then it's more promising. But just where that could close the week in 6 days, it could just dump. So this was there. Cookers not looking good really. It shifted its resistance trend up to the top side there. It's got quite a bit of room to move though, so, and it's hit a break level. It only actually needs one more, if it does close the week, so this could be interesting. If it does close the week in with a positive candle, it'll create an origin level here at that sort of 10-cent area, and then that would break it out to a new high. So that's might just be gearing up for origin level creation and then a dip and a pump. And hype is showing some indifference on the weekly, so I still wouldn't be longing this. it just you want to see it either come back to some support or at least hard close a decent time frame level. Where it is right now, it just looks like it's they just look like they're offloading, and it will probably come back down. So if this closes yellow, it shifts, it'll end up shifting a trend. Wick would determine whether you're going to get a rejection and a dump, or whether or not, if there's no wick, you could just get a close over the top side and a pump. So yeah, still not really going to do anything with that. And say looks better than most. This is on the monthly though, so a bit of time to go on this. But this actually looks pretty good. So this might create a monthly hold level. So if this can stay up where it is, it should be a good run on this. So if it's a lot of the stuff is stuff people aren't really talking about too much, because you just got to remember, if everyone is talking about it, you're late. So this looks like it might just get rid of that trend. So this looks like it might close up for the month, and if it does, it could come back to test this area in here. That would be a retest of the interior support trend and the hold level at the same time, in which case you'd expect a move up. And it could be a decent move up too, because the from a monthly perspective, there's just nothing. There's nothing really. These other lines that are on here are weekly lines. So from a monthly perspective, really, it's that break level up there at 73 cents. So say might be gearing up for a decent move. And yeah, that's it. Hopefully you got something out of that. And yeah, let's see how this thing closes today. Cheers. Bye.